So we're going to get into some economic news, Mike Maharrey. We're going to start a little bit with what's really been on the news a lot is the shutdown, the government shutdown. And I thought that we would kind of do a really basic intro and then kind of what it means. I think for all of our questions tonight, we'll do a what is this, but then what does this actually mean, to regular folks on the street. So starting with the government shutdown, I think as of today, it's 28 or 29 days. You can correct me. I think it's 28 days and counting. But when they say government shutdown, so I've been out and around town, and the street lights were still on, and they're certainly still charging tax for everything. So I'm pretty sure it's not anarchy in the street. So when they say the government is shut down, what does that actually mean in practical sense?
So before we do this, I'm going to drop the gloves.
Oh, okay. Oh. Well, I'm not going to drop my gloves because I
did that really because they're hot and kind of uncomfortable for sitting.
Okay.
So yeah, obviously the government isn't really shut down. I always joke when they have these government shutdowns that they don't shut down any of the things we'd really like for them to shut down, right? They're not going to, stop spying on us or stop the wars or anything like that. They're not going to stop collecting taxes. I still had to, I did a income tax extension, so I still had to file that on October 15th. So yeah, all of that stuff is still going on. In real terms, what it means is nobody's getting paid. So a lot of these government workers who are quote unquote, essential, which if they're not essential, one might wonder why we have them in the first place. But those folks are having to work, and then they'll eventually get paid, once it's all said and done. But really the nuts and bolts of it, as much as anything, it's theater, right? They close things like parks, they quit updating websites, things that really the average person isn't going to really matter to them one bit or, one bit. Most people are going to just look at the world and say, oh, well, it's just like it was yesterday. Government shut down. So what? Now, it is an issue for folks who depend on, things like government assistance. There's talk that, they may not be able to pay out the SNAP payments and some of the welfare stuff, which, we could debate whether or not we should have welfare or not. But the fact of the matter is people depend on that. So it will cause hardships for some people. But really, the bottom line, in my view, it's political theater, and it's designed to try to create as much inconvenience and window dressing for the politicians to grandstand on, more than having any real impact on anybody's life.
What about Social Security? Is there a risk at Social Security if the government shut down, or is that different?
I don't think so. I mean, I'm not on Social Security, so honestly, I haven't paid a whole lot of attention to that. But
of course, when I say is there a risk to Social Security, we mean right now. We know there is, but we're talking about the government shutdown. Yeah.
No, actually, to be honest, now they'll. I think they float a lot of things in the news to make people panic because, again, this is about politics, right? It's about creating political pressure for one party or another. And both of them are trying to shift the blame to one side or another. So they'll float things. And, somebody will come and say, oh, we're not going to get the Social Security checks out. And then, magically they'll figure it out a way to get those quote unquote essential things done. So again, obviously I don't think much of the government shutdown. I think it's mostly just politics. But, it is what it is. And it certainly has an impact on some folks. For better or for worse.
Well, so we'll wrap up the shutdown question with this: is that at the end of the day, and I agree with you, it's mostly about politics. But when we say it's about politics, we're talking about blame, right? So the Republicans want to say that the Democrats are to blame for the government shutdown because they won't vote for this bill, for a spending bill, and Democrats, of course, are going to blame the Republicans because at the end of the day, that doesn't work on you or me because when we hear government shutdown, we think whoopee, we're happy about that, but they actually want, I mean, and this is sort of, in my opinion, this is kind of sort of like the vile part of it, is they want regular people's lives to be affected. They want you to hurt so that way you'll be out in the streets. Harumph. Why won't those people vote for this bill? And there's a certain level of insidious evil to that. I feel like is that they're actually banking on you being upset and you being affected so that you'll then rally to their cause politically rather than genuinely having, their constituents, bet lives on the line. So if you had to place blame, is the blame Republicans, Democrats, both. And I'll also add in there, you and I discussed this before the show started, is that I know a lot of Republicans, the MAGA people, are really upset with Congressman Thomas Massie from Kentucky right now, because Thomas Massie has essentially sided with Democrats, saying, well, we're not going to vote for this bill. Now, the reason he's not voting for the bill is because a clean continuing resolution would just be voting for the most recent budget, right? Which was Biden's 2024 bill. So just so that everyone's clear at home. So MAGA Republicans are mad because Thomas Massie won't vote for Biden's spending budget. Do I have that right?
Yeah, that's basically it. So
Okay.
for folks who maybe aren't exactly clear what the specific issue is, the Republicans want to pass this continuing resolution that would basically continue everything at the current spending levels that we had under the Biden budget until they can hammer out a 2026 fiscal budget, and this would happen, I guess in the middle of November. So it's kind of just pushing the can down the road so that they can get a deal. And the Democrats are saying, well, wait a minute, if we're gonna extend all of these budget things, then we should also extend the Obamacare tax subsidies, which expired on September 30th. And the Republicans are saying, no, we're not going to do that. And so that's, in essence, that's the roadblock. Now, who do you blame? Well, I'm not a partisan, so I'm not inclined to blame either side. I think they're both retarded. And the whole thing is stupid. And exactly what you said. We had the show of Doge, and we're going to cut spending, and yet nobody actually wants to cut the spending that they found. It was more political theater, it looks like to me, where we can point this out and look how bad these people are, but they're not going to really do anything about it. So I'm not going to pin blame on either side. It's politics, and politics is dumb no matter which side of the party aisle you're on.
Well, on that note, let's move on to something else that's in the news a lot, particularly under the current Trump administration. Let's talk a little bit about tariffs. So I know that sort of in our free market libertarian type circles, you'll hear a lot of people make the argument that, well, tariffs are just a tax on us because, if a tariff is placed, which is going to raise the cost of, say, manufacturing from China, well, they're just going to pass that cost along, and so that ultimately you and I would pay for it. But let's just for argument's sake, let's leave that part of it out of the equation for now, and let's just talk about the actual numbers themselves. So start us off with kind of keeping to our theme of what is this, and then what does it actually mean? Historically, what are tariffs, and what is like the purpose of a tariff? And then we'll talk about, are the tariffs actually serving any positive function for us right now?
Yeah. So you're absolutely right in that, when you boil it all down, a tariff is a tax. It is a tax the government charges on products that are coming into the country from another country. So, China sends us TVs. They have to pay a tax for the privilege of bringing those televisions into the United States and accessing our market. So that does raise the cost of a TV. And, we can debate who's going to pay it. It's not completely true that the customer bears all of the tariff cost, but they do bear some of it. But really, that's not important. It is important, though, to understand that it is fundamentally a tax. Now, what's the purpose of it? Well, there are multiple purposes for taxes, just like they are with any other tax. For one thing, it is a revenue generator. And we've heard people talk about, maybe we can, get rid of the IRS. We'll get rid of the income tax and we'll replace that with this tariff revenue. That's one argument. But tariffs and taxes in general can also be used as incentives, shall we say, to get people to behave in a certain way. So you hear of taxes on cigarettes, and the idea is we're not really, we're not trying to raise revenue. We're trying to get people to smoke less by raising the cost of smoking. So tariffs have also been used historically as a tool of protectionism. We raise the price of cheaper imported goods, which allows more expensive domestically imported goods to compete. So if you have to raise the price of that Chinese TV, then the Americans don't have to worry about the fact that their TVs are a little bit more expensive because production costs are more here in the United States. So it can be used as a policy tool for trade to, incentivize behaviors, or it can be used as a revenue generator, or it can be some combination of those two things.
So okay, so let's focus on that whole tariffs as an exchange for, closer to home, like personal income tax. I think a lot of people who normally would kind of scoff at this. It's kind of like, again, I hate to bring partisan politics into it, but I think there's a lot of people who are right of center who on the surface would say, well, I generally don't agree. I don't agree with tariffs just simply being used as a political bludgeon, because that has nothing to do with economics at all. That's just force. But I in principle, I don't believe in tariffs. However, at the end of the day, I just want things on net to be better for Americans. And that's fine. I'm sympathetic with that part of the argument, that if you believe that pursuing this policy preference is going to make things on net better for Americans, then I'm not wholesale against it. But if you're being sold on the idea that raising tariff revenue is going to mean that you and I don't have to pay income tax next year, the numbers don't seem to bear that out, right? Let's talk about that.
Yeah, the numbers don't bear that out at all. And I think, first off, I think a lot of people really just have no idea exactly how much money the United States spends on a monthly basis. It spends well over $500 billion every single month. So imagine how much revenue you're talking about to just cover that spending. So let's look at the tariff revenue. I happen to have the data here. I'm going to glance to my side because it's on my other screen here, so that's why I'm kind of looking around weird. But the U.S. collected $202 billion in customs duties in fiscal 2025. So the fiscal year actually ended on September 30th. So we've actually started 2026 in terms of government calendar. So $202 billion. That was a 142% increase in tariff revenue year on year. So, yes, the U.S. is bringing in a lot more tariff revenue than it was the year before. But think about that number. I said $202 billion. That was for the entire year. How much did I say the U.S. spends every single month?
Over $500 billion a month. Yeah.
Right. So that tariff revenue that we collected for the entire year wouldn't cover even a third of a month's spending on an average month. So looking at September, the government took in $30 billion in tariff revenue. That was a 295% increase. And yet we still ran the fourth largest budget deficit ever with all of this tariff revenue coming in on top of the income taxes. So this idea that tariff revenue is somehow going to fill this tax hole is absolutely absurd. The numbers just don't work. And the reality is that the federal government spends too much money. Now, back in the day when the federal government was much more limited and wasn't trying to do everything in the world, maybe you could run a national government on tariff revenue, but we've gone well past that possibility. So the other thing that irks me about this argument is that people want to talk out of both sides of their mouth when it comes to tariffs. On the one hand, oh, this is great, it's raising all of this revenue. On the other hand, most MAGA people will tell me that, oh no, the tariffs are really just a bargaining tool, right? We're going to get better trade deals, and then the tariffs are going to go down. Well, if that's going to happen, then that means that tariff revenue, we're probably at the peak, right? I don't think we're going to see more tariff revenue coming down the road. If we make trade deals, ostensibly that tariff revenue is actually going to drop. So which is it? Are we really trying to do deals? And is this a bargaining tool? Because I'm actually a little bit sympathetic to that argument. You can make the argument that China or Vietnam or India, that they're imposing unfair trade practices on us. So we're going to hit them with high tariffs and then force them to the bargaining table, and we'll both come out better off on the other side. That's not a bad plan. Unfortunately, it never seems to work out that way. But you can't have it both ways. You can't have tariff as the revenue generating tool and as a bargaining tool and as a trade policy tool. It's not going to do all of those things. So, pick one.
Yeah, I did notice the numbers that I had looked at. You had already talked about that month versus year. That the estimates over the next decade. Of course, again, we know that the CBO's estimates are just always the rosiest possible expectations, and they never turn out as good as that. But even considering the rosiest possible expectations, and also even considering like we need to cut spending drastically, but they don't do that. Spending still goes up, inflation still goes up. So let's just say in the rosiest possible scenario, everything's capped exactly the way it is today. They don't spend another cent more than what they're spending right now. Even based on that, tariffs over the next decade are only going to, at best, cover 1% of the budget. 1%. Yeah, so I agree with you that it's so funny because something that we've heard more recently, and again, it's not that I don't agree with this to an extent. It's just that doesn't mean it's a good thing. A lot of people will say there's really no point for a politician to go up there to the podium and talk about the national debt because no one cares. We know that the 37 or now 38, I mean, maybe it's 38 trillion now in the time we've had this conversation. Yeah. Oh, perfect. Yeah. That's not going to get paid down. We know the United States is never going to pay off that debt. It's never going to happen. At least not in the way the government functions today. It would have to wholesale different form of government for that to happen. Mm-hmm. But so it may be a political non-starter to talk about the national debt, but at least something that is connected to the national debt that should be politically viable to discuss is spending. Because if we can't cut spending, then all of these issues that we're talking about are only the next generation's is only going to have it worse. The next generation after that is only going to have it worse. The next generation, oh, you can't afford a home today. Oh, it costs a lifetime salary to go to college, and then kids can't pay off that debt. Look, it's only going to be worse every generation from here because those things were never dealt with. But speaking of all that, I actually want to move on to our next topic that is a little bit related to talking about future generations having to deal with this gobbledygook that we're talking about. Let's talk a little bit about the job market. Now, of course, folks that follow me will know that I love the job market. It's just fantastic.
Yeah, you do.
Yeah. But the job numbers particularly are so funny because we've heard, I mean, this has been from like every administration ever, but let's just talk about recent presidencies. So during the entire Biden presidency, job numbers would come out and they would always paint a rosy picture of unemployment is down. All these new jobs were created. Salaries are up. The economy's running great under this Democratic administration. And then critics would often cite that, well, if you look months later, they always revise these numbers. It's always months later when it's out of the news cycle, of course. They would revise these numbers. And of course, they always are being revised down. I mean, can we remember a time that they revised things and things were actually way better? That never happens. It's always that things were worse. And then, of course, when Trump becomes president, this practice continues. They're still releasing job numbers that are not, by the way, are not great, but they're actually always being revised down. They're even worse than expected. So much so that Trump actually back in August, he fired the commissioner at the BLS, Bureau of Labor and Statistics, saying that, oh, well, they're manipulating the numbers to make me look bad. That was Trump's argument, is that, well, you're just trying to make me look bad. You're a holdover from the Biden administration. You're fired. I'm not going to try to do a Trump impression of the "you're fired." I'm sorry, audience. But then 1 month later, the next statistics come out under a new commissioner, and guess what? They're even worse. So let's talk a little bit about the job market and the numbers that come out. Can we ever believe any of them? And how's the job market actually look?
Yeah, it's one of those things where like the numbers I don't think really reflect reality.
Mm-hmm.
But they're the numbers that we have, and it's what everybody uses for policy making. So we kind of have to pay attention to them because they matter, whether they should or not. And you're absolutely right. We look at the last year of the Biden administration, and they erased almost 1 million jobs from the BLS estimates over that time period. When you go through all of the adjustments,
Hmm.
from the initial announcement to what they've come up with now. Almost a million jobs just disappeared because some guy did some math wrong or something, you know?
Hmm.
So it is crazy. And you make a really good point about the way the revisions work. They're almost always down. Now they do revise them up every once in a while, but I actually went back and looked at the job data for like the last, I want to say I went back to 2000. And there were only like 6 times that the numbers, or 6 years out of those 25 or 24, where the numbers were higher at the end of the day than what were originally announced. All of the rest of those years were revised down. I mean, you would think it would, if they were just making a mistake, you would think it would at least be like 50-50 or close, not even close.
Hmm.
So the veracity of these numbers is questionable, and you just have to consider too, just the way they do the data. For instance, if you go out tomorrow and you start delivering pizzas, they're going to call that in the data a job added, even if you're just doing it part-time.
Yeah.
And if I go out and start driving for Uber, even doing the job I still am now, it's going to say, oh, the economy added one job. Well, it added one part-time job because I couldn't pay my bills with my job, right? The data
Yeah.
doesn't capture those nuances. So you really have to kind of dig into the job market. It has been weak now for a couple of years, getting weaker. And I think anybody that's out there actually looking for a job, you can attest to this, will tell you that it's not nearly as great as everybody. If the labor market was as tight as advertised, people would be like lining up at people's doors to hire them, and that's just not happening. So, I
Hmm.
mean, it's pretty clear that we're in a softening labor market. It's pretty clear that we're in a stagnating economy. We're not in a recession kind of territory, but we're just kind of muddling along. And a lot of economists that I've talked to think that that's kind of the future. We're just going to kind of muddle along because that's the best the economy is going to be able to do, given the burden of debt and the malinvestments that are still inherent in the economy because of all of the monetary malfeasance over the last 2 decades.
It's so interesting. Something that I've heard now for years, this is not a modern phenomenon, is that a lot of times when they say unemployment's down, they'll say it's because there were people looking for jobs who then give up and are no longer looking for jobs. And then they no longer count them as being unemployed in the
Right.
statistics. And also, you kind of already touched on this, is that if a, let's say retail chain X eliminates a full-time position because they don't want to pay that much money and they don't want to have to give anyone any health care or benefits, and then so they remove one, say, 45-hour a week job, and they add two 15-hour a week part-timers to go collect carts. That's a net gain of one job, right? But we
Yes,
know
exactly.
that those two kids aren't making a living on that, and the guy who was trying to feed his family is out of work. That was a net loss for the American economy, but the job numbers say that it's been an improvement. It's so interesting to me, even as my own personal anecdote can attest. And of course we're heading into the holiday season as we speak. It'll be Thanksgiving and Christmas before you know it, and we know that there's always a surge in seasonal job openings, right, for the
Mhm.
holiday season. But in these job openings, what you find so often is that companies, again, what I'm about to describe to you doesn't sound like companies are having to fall over themselves to find the best candidates because it's such a competitive job market. What it is they will want to hire someone. It's going to be part-time, but they want you to have full availability on their schedule because they hold all the cards. They're going to pay you a wage that, Mike, when I was still a kid, when I was like 20 something years old, early 20s, before I opened my business, I could already get a job somewhere making $15 an hour. Remember all the
Mhm.
hashtag fight for 15, which you don't hear so much anymore because now $15 isn't any money. I think that's why you
Nope.
don't hear that anymore.
It is. Yeah.
I already had a job making $15 an hour. And at that time, I thought, well, this isn't bad. I wish I could make more, but this is the best job I've ever had. Mike, this is like 2006 we're talking about here.
Mhm.
You have companies today that are actually hiring entry level people for less than that. They only want to pay 12, 13, $14 an hour. So the hashtag fight for 15 people are now a decade too late. $15 doesn't pay anything, and you're still not getting $15. And again, you know, and I know I use that kind of cultural phenomenon as an example. And again, you and I both know, okay, the true minimum wage is $0. They could just, you know, it could put people out of work. I get all that from an economic standpoint, but I'm always going to sympathize with the common man who says, yeah, but I actually can't live on that job. So if I take that job, I now have no free time, but I still can't pay my bills at the end of the month. How can you possibly be telling me the job market's good? That doesn't make sense.
Yeah. I mean, you've probably seen the meme. It goes around periodically with the 5 silver quarters from 1964, back when our quarters still had silver in them. And, you know, they point out that was the minimum wage. It was like $1.25. And
Yeah.
if you melt those 5 silver quarters down now, I mean, we're over $8 an ounce or $8 for a quarter, you know, for the melt value. So what's that? 5 times 8, that's like $40, right? That's what your minimum wage was when we actually had real money. And so that's really the issue that we're dealing with, is it's that fact that prices are rising faster than wages. And it always happens that way. That's why people will always tell you that a high inflationary environment is most difficult for the working poor and those on fixed incomes, because wages are always the last thing to adjust to inflation. So in the meantime, you're able to buy less and less. And so really, we don't have a wage problem in the United States. We have a money problem in the United States. The government is literally ruining our money on a daily basis as a matter of policy. And we see that reflected in these kind of things that you're talking about, where, you know, a guy now can't make it on $15 or $20 an hour, whereas even 5 or 10 years ago, that would have been a sufficient wage at least.
Oh yeah, exactly. I use myself as an example that if this were, it's so funny. This is something we've talked about on the show before, is that it's not just the ridiculous debt and the ridiculous inflation and the devaluing of the dollar. It's how much it's accelerated just over the last few years. It was bad in 2010. But it's gotten so much worse in the last 10 to 20 years that suddenly a job opening of $20 an hour, you're thinking, ugh, I guess if that's the best I can do, because it's still going to be, money's going to be tight. Whereas, you know, again, I remember being a young man. If you said, hey, I need some help around the house, how's $20 an hour? I'd have been like, oh man, this is, you know, I've hit the jackpot.
Yeah. Especially for somebody that's old like me. You know, I'm 58. I mean, I remember when I was a young man thinking, man, if I could make $20 an hour, that'd be awesome, you know?
Yeah.
And that's just not a reality. I think that's part of the problem, though. You know, you get a lot of these people in Congress and stuff, and they've not had to have a real job in decades, and they're, you know, 560 years old. So in their heads, you know, oh, $5 an hour is still a pretty damn good wage out there, young man. Just get to work. You know, pull your boots on.
Yeah.
It's sad.
Yes,
that's the world we live in.
That is my favorite boomer response to anyone struggling in the market today, is that, well, you must be lazy. Just get a job. Just go work. Like, right. I hate to tell you this, sir, but Pizza Hut won't pay me enough to live. Sorry. So since we were talking about money, let's wrap up there. Talk about money, but also talking about what we would consider to be real money. Let's talk a little bit about gold and silver. Of course, you're over at Money Metals, moneymetals.com. We talked about their site a little bit earlier in the show. It's been an exciting time in the news cycle for gold and silver lately. So talk a little bit about the spike in the price of gold and silver. I know that there's been a little bit of a sell-off. I know you're going to talk about that, but let's talk about the price of gold and silver, and how that may be exciting for you if you have a bunch of gold and silver. But what does that actually mean when the price of gold and silver spikes?
Yeah, absolutely. So just for some perspective, I think most people who are following the markets at all are aware of the fact that gold and silver have both done pretty well over the last year and a half. Just to put it in context, even after the recent correction, gold is up over 85% since January 1st, 2024. That's just a phenomenal increase for an asset. Gold has outperformed virtually every asset class, including stocks, Bitcoin was a little bit better last year. I don't think Bitcoin's doing quite as well this year. So we can compare those two. But by and large, gold and silver are the king and queen assets. Other precious metals are doing well, as also including platinum and palladium. But you make a really good point, or you allude to a really good point when you say this is telling us something else, right? It's not just,
Mhm.
oh, look, gold and silver are going up. People want gold and silver. It is telling us something about the monetary system. Gold is historically money. It is still money, right? You can go anywhere in the world and people will recognize the value of gold. If you wanted to buy something, virtually anybody in the world would take gold for it because gold is real money. So when you
Mhm.
see the price of real money going up, it's telling you that the value of the fiat currencies are going down. And that's
Mhm.
really the bottom line of what it's not that, I've always said that gold really isn't a great investment. Gold is just an inflation hedge. It protects your wealth from the relentless devaluation of government policy when it comes to fiat paper money. And that's exactly what's happening. The value of the dollar is going down. The value of the rupee is going down. The value of the euro is going down. So therefore, when you price gold in those assets, that price is going to go up. So gold and silver are reflecting monetary devaluation. When you see gold surging, generally speaking, especially over a long term, generally what that's telling you is that your purchasing power is going down. Not
Mhm.
only, it's just like everything else. Your milk is more expensive, your lumber is more expensive, your clothes are more expensive, and your gold is more expensive because dollars buy less.
Well, something I wanted to show on the screen. This was a chart that you found for me. Going around the social media, around Twitter, about a week or two ago, people were just sort of talking about this chart that was saying if the stock market may be rising, line go up. There's been a recent sort of a recent cultural war in the economic world between the line go up people, which basically our argument be, look, if stocks continue to rise and shareholders continue to cash in, that means the economy must be good, versus the regular layman who says, well, I'm being evicted, so actually I know the economy's not great. I don't care. I don't care what the S&P 500 is. And so people were sharing this interesting chart that was talking about the Dow priced in gold. And this chart right here, for people looking at home, this is 1929 versus today. So instead of showing just the line go up of the average stock price, or the money in the stock market, this is the value of the stock market priced in against the value of gold. Just so for people who may be listening instead of watching, the peak in 1921, the Dow was priced at 19.1 ounces of gold, whereas today the Dow is only priced in 12.2 ounces of gold. So that's actually a change of negative 36.1%. Mike, what does that mean?
That means that inflation has pumped up the stock market just like inflation has pumped up the price of everything. And that's something I think a lot of people don't understand. And part of that I think is intentional. The government and its support units in academia and financial networks have kind of redefined inflation. You go back to the 1970s, if you look up inflation, it will tell you that inflation is an increase in the supply of money and credit. It's a growing money supply. One of the symptoms of this monetary inflation is consumer price inflation. Consumer prices go up as the money supply increases. But what people don't understand now, they just think inflation means consumer prices are going up. So, you
Mm-hmm.
know, they think it's just about eggs. But the fact of the matter is, inflation impacts a lot of different things. And sometimes it doesn't even show up in consumer prices. Sometimes it shows up in financial markets. It will jack up the prices of the stock market. It will jack up real estate, which is what we saw in the run up to the 2008 financial crisis. So, depending on the dynamics in the market, will kind of dictate where that new money will go. But a lot of it has gone into the stock market. So, the stock market is also reflecting inflation, which is what this is really telling you is that the value of the stock market priced in real money has actually gone down. Stocks not line up, it's line down when you account for the inflationary effects. So, even stocks aren't really better off if you factor out the inflationary pressure. So we have an economy today that is really built on this easy money, this constant money printing, this artificial injection of liquidity and debt. And eventually that has to correct. It has to explode. It has to cave in because it's not sustainable in the long run. It's not a real economy. It's all built on smoke and mirrors. And, eventually the smoke fades and the mirror breaks. So, I'm afraid at some point we're going to have the reckoning, and it's going to be even more unpleasant than the stuff that we're dealing with now.
Well, on that note, we're running short on time, so I want to make sure to tell the audience that if you're interested in getting some real economic news, particularly as it pertains to precious metals, then where can people go, Mike Maharrey, to learn more about you and what you write about, and where they can get their gold and silver?
Well, go to moneymetals.com/news first. And if you're on the main moneymetals.com page, you can see right there at the top bar, there's a button for news. And if you click that, you'll go to our news page. And I generally write a couple of articles every single day, or at least every work day over there, covering what's going on in the gold market, what's going on with the Federal Reserve. I've written about the cooked job numbers, and I've written about this change in the definition of inflation. So that kind of information is out there and available. And of course, if you're thinking, well, I don't want my purchasing power to keep declining. Well, you want to have real money. If you are saving money at all, and you want to hold money for the long term, you don't want to hold it in dollars, because 10 years from now, even if they just go as planned, right? Even if it's just the target of 2%, in 10 years, you're losing 10% of your purchasing power every decade. So you want to have real money, you want to have gold and silver, and you can get that over at Money Metals. We have everything from bars to coins to collectible rounds. We have a program where you can actually do an installment plan for as little as $100 a month. You can start building your gold portfolio, because I know a lot of folks out there don't have $4,000 to buy an ounce of gold. So you can buy it a little bit at a time. So there's a lot of great programs. There are ways you can get involved, but you want to protect your wealth if at all possible. And I know a lot of people are saying, like, I don't have any money. And that's fair. But maybe you can at least, maybe if you're saving anything at all, you can get a couple of silver rounds or something. But you definitely don't want to hold on to dollars for the long term, because they're just not going to buy as much today as they will tomorrow. So check that all out at moneymetals.com. I also do a podcast every Wednesday, and you can find that over under the part that says resources. We usually post it on the news page as well. But I do a 30-minute to 40-minute podcast where I talk about kind of what's happened in the past week and get into some of the economic principles and some of the fundamentals that are underlying the markets. And I try to do it in an interesting way that people that aren't necessarily like big into investing and stuff can listen to, get something out of, and understand what's going on a little better, to hopefully navigate this. Because I say all the time, this is not something that you can vote away, right? You're not going to get the right people in office who are going to fix this. This is unfixable. And this is the policy. 2% inflation is the plan, right? And they're way above that. So you have to do what you can to shield yourself from it, because you're not going to stop it. And so that's the way you can do it. We have to take our own steps as best we can to try to navigate the crappy world that the government's given us. So we can help you over at Money Metals if you're interested in doing that.
Every Wednesday, a 30 to 40-minute podcast talking about all this economic news. And today, Mike did 2 of those. He did one for Money Metals, and then he did one for It's Too Late. So thanks for working overtime, Mike, for us. And you know what? As Mike can tell you, you dress for the job you want, not the job you have.
I am a beer league hockey player. And I even had to break into the beer because I got kind of thirsty and I didn't have any water. So
I noticed that, and I wasn't going to say anything, but since you brought it up, HR called.